My name's Ethan Braid. Today we're going to talk about the housing market. We're going to assess what really happened and what the truth is with respect to how prices went up so much, what caused this inflation. It's not what we've been told in the media. The idea that there aren't enough homes, it's total nonsense. And so you're going to want to stay with me on this video. This is going to be a longer video, but we're going to cover a lot of ground, and I think you're going to find it very enlightening, and it's going to get you thinking about your own personal situation and what you're doing with respect to housing. Let's start with mortgage rates. Mortgage rates are 6.88% for your standard 30-year mortgage. And while that might seem like a lot to people, I think it's important to take a look at where we have been over the last 53 years. The trend for mortgages was up all throughout the 70s, peaking in the early 1980s, and then for the last 4 decades, the trend has definitively been down, down, and down. The trend of the last 40 years is clearly broken. I think this is going to have major implications over the next 10 years. With the long-term trend line clearly broken, and mortgages reverting back to the long-term average of 7.73%, I think it's very unlikely that we're going to see mortgages back in that 3 or 4% range. The housing market is a total mess right now. We all know that, right? We hear about it every day. But one thing I think that you're not hearing is why it happened. The reasons that we hear, in my opinion, are not the real reasons on how we got to the mess that we're in. We all hear about lack of inventory as the reason why house prices are so high. And that is true. Inventory is very low, and it's definitely a contributing factor to why house prices are so high. For instance, in the Denver, Aurora, Lakewood, Colorado area, we only have about 4,000 homes for sale, and we're well below historical averages. But just why is the inventory so low? That's the question that we should all be asking. And we hear about sellers refusing to sell because they're locked into low interest rate loans. And yes, that is true too. But there is a much bigger force behind this housing crisis. Let me show you what that force is. Here's a look at the number of homes, single-family rental homes, owned by one company in the Western United States. This is Invitation Homes that we're looking at. And I'm going to highlight Denver, Colorado. In Denver, Colorado, Invitation Homes owns 2,670 individual homes. That's more than half of the available home inventory that is for sale currently in the Denver market. When one company owns more than half of the available home inventory for sale, do you think there might be some market manipulation going on? Oh, geez, I don't know. Let me show you another company that owns a lot of homes in the Denver market. American Homes for Rent is another large publicly traded REIT that has a presence in Denver, Colorado. Here we see in Denver, they own 842 single-family homes in the Denver market. So let's get this straight. You have two large publicly traded companies that own 88% equivalent of the for sale inventory in a huge city like Denver, Colorado. That's insane. And that's just two companies. There are so many more companies who own homes to the tune of a few hundred here, a hundred there. You've got hedge funds, you've got private equity groups, you even have pension plans and insurance companies, and then small investor groups. What I'm saying to you is that over the last decade of free money and low interest rates, when your mortgage was down to, or you had the ability to refinance your mortgage at say 2.75 or 2 or 2.5, guess what? Large companies were borrowing billions of dollars and buying up all the homes, right? So when the Federal Reserve decided to irresponsibly overstimulate the economy, put so much money out there in the wake of COVID, and buy over $1 trillion of mortgages and mortgage-backed securities, terrible idea. Jerome Powell needs to apologize for that. But what they did is they gave gasoline to this market. They put it on fire. They gave private equity and hedge funds and various other investor groups the opportunity to just snap up all the housing. So what's really intriguing is there is no law that I'm aware of against market manipulation, i.e. cornering the market for housing, right? There was no such law in the 1920s, for instance, against stocks. In stock cornering, market manipulation was totally legal. So was insider trading until the SEC came around in 1933 as a result of the Securities Exchange Act. So you got to ask yourself, are we in the midst of a massive market manipulation? I say absolutely. If you think otherwise, you are out to lunch. If you think for 1 second that all of the numerous groups that have billions and billions and billions of dollars at their disposal and control inventory positions that are almost equivalent in some cases to the local supply of homes for sale, do you think they're not manipulating the market in some places? Now, maybe it's not across the United States. I don't think that it is. But is it happening in certain zip codes? You better believe it. If you don't think that that's true, then I don't know what to say. I mean, it's obvious that that is what has happened and how we got. Here's a look at Jerome Powell back in the COVID pandemic, buying all the mortgage-backed securities he could get his hands on. Look at this massive explosion in mortgage-backed securities held by the Fed, over $1 trillion. If you want to know why your market for real estate is insane, here is one of the biggest contributing factors. Jerome Powell and his crew went out and just flooded the market with liquidity. Irresponsibly, they overstimulated and put all this money out there. Consequently, you saw mortgages under 3%. And like I'm saying, it wasn't just your average family buying houses. It was also investor groups. And they went out and bought as much as they could because it's an arbitrage opportunity for them. When I say arbitrage, I'm talking about the fact that hedge funds and private equity groups could borrow money at, say, under 3%. And then turn around and buy homes and rent them out for a total return north of 6 or 8 or something like that. And the spread in between is the arbitrage. So by taking interest rates down, by overstimulating the economy and buying all the mortgage-backed securities, the Fed essentially gave tremendous ammunition to private equity groups, hedge funds, REITs, etc., to go out and buy homes. And so again, it wasn't just families who were able to get a good deal. You gave all these investor groups a great deal too, and they went after it clearly in a huge, huge way. And so it pulled all of the inventory out of the system, right? And now think about this. There are over 1 million short-term rentals, and I'm talking about Airbnbs and VRBOs. And then you've had millions of homes purchased by investor groups, REITs, pensions, insurance companies, hedge funds, et cetera, et cetera. What if that maybe 4 or 5 million homes that have been snapped up over, say, the last 5, 7 years, 10 years, what if all those homes were actually available for sale for families? You would have a radically different price in place for homes or price structure. You'd have a very different market. It would be much more balanced. The reality is, the truth is, that investors were given a tremendous opportunity with basically free money to corner the market, and corner the market they did, just like the 1920s with stock trusts in groups who went out and did stock corners. Here's a look at existing home sales in the United States. Currently, we're at about an annualized rate of 4 million homes being transacted in a year, and you can see that we're at a low level here. We're back to where we were in the depths of the 2008 great financial recession. And one other thing I'd like to point out, I have recessions here is the gray bands on this graph. And notice that recessions don't always have a big impact on the housing market. You can see that in the 2001 recession, the housing transaction volume was basically unaffected, right? So it really depends what kind of recession you get for the impact that you're going to see on housing. Now let's talk about where things might go going forward. Here's a look at our debt to GDP. Way out over our ski tips at 121% plus debt to GDP. And you could see that this debt problem has been building and building and building over the last 50 years. And keep in mind, when we're looking at mortgage rates, okay, or let's say look at the 10-year US Treasury, as we're coming down, 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 and down, the debt position or debt relative to GDP is going up, 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 and up. What do you think the future is going to be like? This level of debt that we are dealing with in our society is unprecedented for anyone alive today. It's been seen before many, many times over thousands of years, but no one alive today has ever experienced it. And so the debt is going to have a tremendous influence on what happens with interest rates. But we're in such an uncertain environment, it's really hard to predict what's going to happen. So my advice to people who are looking to buy a home or who own a home is this: do not plan your future on thinking that you're going to refinance. You might not be able to. I know that's not a message you want to hear, but it's the truth, and the truth matters. We are in such a crazy state right now that we may see a deflationary event in the next 10 years. You may see lower interest rates because of a deflationary event, but are you going to be able to refinance? Remains to be seen. Will you still have a job? What will be happening? What will the value of your house be? More importantly, maybe interest rates go down, but your home value goes down. Conversely, we may have an explosion of inflation in the future, right? We have so much debt in our society, and especially at the government level, and these fools are going to keep printing money and printing money. We may have higher interest rates and higher inflation, and you won't be able to refinance under those circumstances either. So focus on what you can control. If you're buying a house, don't go more than 2 times your income. And if you can't buy a house, maybe you have to stay in a cheap apartment or cohabitate, or you're going to have to sacrifice. And I know that that is not something people want to hear, but that's the truth. You're going to have to sacrifice if you want to get ahead, or maybe move to a city that you can possibly afford. I don't think this insanity can go on too much longer. Maybe a couple years, it's probably going to blow up, but I would not leverage yourself to where you're like, 40% or more of your income is going to your mortgage. That's just crazy stuff. And unfortunately, here in Denver, Colorado, a lot of people have been doing that. And I think they're going to be sorry a few years from now. The reason I say don't plan your future on refinancing is that refinancing opportunity may never happen. If we look in the early 1970s, you paid about 7% right here for your mortgage. It wasn't until 30 years later, roughly, that you had an opportunity for refinancing. And by then, you had paid off your home. So let's go back to the millions and millions of homes that are owned by investors. This is something that we've never seen before. And by the way, many of these investors have never been landlords before. Okay, so I'm very curious. How will they react if we do get a recession and their tenants just can't pay the rent? All of a sudden, and very quickly, being a landlord isn't going to be so fun anymore. And so I do wonder, I'm curious, what is going to happen when we get a recession? And it's not if, it's when. When we get a recession, will the housing market see a significant amount of inventory due to all the investors who are now finding it's just not so fun to be a landlord when tenants don't pay? And by the way, as we have seen, other people have put this information out, like Nick Gurley, very bright guy. He's showing that there are an incredible amount of apartments coming over the next, say, 12 to 18 months. We sure see it here in Denver. There was an article recently about the tsunami of apartment units that are on their way in Denver. We had 50,000 units delivered over the last decade. We have 50,000 coming this year. And you can see it. You drive around the city, everywhere you look, there are cranes in the sky. I just wonder, what's the environment for housing going to be in about maybe 12 or even 2 years from now, 12 months or 2 years from now? It could be very, very different than what we're seeing right now. The last thing that I want to talk about is PPP. This was the greatest financial boondoggle of all time. And I think that it had a tremendous influence on the housing market. It's interesting. I know lots of people in the banking profession. And if you're a banker and you're listening to this, you're watching this video, think about your customers at the bank. The bankers that I know all tell me the same thing. Ethan, about 70% or more of our customers who took PPP, and by the way, all their customers took PPP, but about 70% didn't need it. You know, their business was fine. They had revenue coming in. The employees were able to work from home. The people who suffered during the government imposed shutdowns were restaurants and businesses of that nature. But there were many companies, very successful private companies, who were able to keep operating. The revenues were just fine. In many cases, the revenues increased. But these owners got PPP. And by the way, I did not take $1 of PPP. Okay, you can look at the publicly available database of PPP participants and it will just blow your mind, the people who took the PPP money. Here in Denver, just some of the people that took this cash, it's unreal. And to think that they didn't buy homes, they did buy homes, second homes, Airbnbs, etc. Many, many, many people who took PPP did not need it in the end. I think that it should have been returned or at a base minimum made taxable, but we didn't. We as a society, as a government, we just gave everyone a huge tax-free handout. Really unfortunate because a lot of that PPP money went into the housing market and that caused major inflation for all of us. So to sum it all up, you had three major factors influencing the crazy jump in housing prices and the inflation that we're all living with, in my opinion. You had PPP, you had the Fed giving out money like candy and lowering interest rates. And then you have investor groups en masse buying up all the single family homes that they can get their hands on. Those three forces are why we have this insane housing market. And then add on to that everybody is now trapped essentially in a home that they couldn't purchase at the current price with a loan that they can never replace, right? They're at a 2.75% loan. It's nuts. How is it going to end? What's going to happen in the future? None of us know. Nobody has a crystal ball. But I would plan your life, prepare and your financial life at a minimum on, okay, some wild stuff might be coming down the road in the next couple of years. Be prepared, save some money, live beneath your means. Don't buy a home right now at these ridiculous prices, or at least make sure if you buy an expensive home, you better make a lot of money and be prepared for the inevitable. Something is coming and it might not be pretty. The bottom line is that what we've all been told by the media about why house prices have gone through the roof and we're living with so much inflation, that there aren't enough homes, it's all BS. It's not true. The real reason that home prices have gone through the roof is because the Fed is irresponsible and we had PPP and investors have been buying up the homes left and right. That is the real reason. And let's just face it, if there weren't enough homes, as we hear all the time, we've underbuilt homes, there aren't enough homes. If that were true, wouldn't it stand to reason that there would be millions of people homeless? And I'm talking about millions of people, not the homeless who have mental health reasons, but the homeless who have jobs, right? I have a job, but I have no place to live. It's all BS, right? There are plenty of homes. And there's going to be a lot more in the future as the baby boom generation transitions to the next phase of their life, unfortunately. We're going to see a lot of homes come on the market in the future. So this idea about not enough homes, that's why home prices have gone up, nonsense. How about the millions and millions and millions of homes that have been snapped up by investors, right? Under ordinary times, those would be homes that would be for sale and families would be buying them at realistic prices instead of being forced to rent like a nation of serfs. I hope this video was helpful. I hope it got you thinking, helps you better analyze your finances and overall improve your family's financial plan.